to the RationalInvestor.com's Daily Brief. The answer to your question is learn the goddamn process, trade your trading plans, don't take too much risk on any one trade, and just let yourself get rich. Hello, everyone. Welcome back to the RationalInvestor.com's Daily Brief. Try and do like maybe a 15-20 minute show here for you today. Monday morning, right out of the gate. Hello, Hafed. Hello, Constantine. Nice to see you guys over there on YouTube. I don't think there's not really that many people watching. And unfortunately, I mean, I suppose it's a good thing. I mean, I've been barking to everybody about be careful on Bitcoin, and crypto's got lots of bearish price action and, no W's, no divergences starting to come into trade location anyway. And unfortunately, the viewership actually goes down, which is actually exactly what normally happens. And it's why this business is so screwy. When people should be paying attention, they aren't, and they'll be off doing other things because, shiny object. Ooh, look at that over there. But when they really shouldn't be buying and they should leave this crap alone, and Gucci sweater wearers are shilling courses on how to buy Bitcoin, and they have no idea what the hell they're talking about. The public, you can't get them to like put their money away. It's so frustrating. But anyway, that's the job I signed up for. So here we are once again. This is when we should be paying attention. I've often told you guys, opportunity is now here versus opportunity is nowhere. I would imagine most of the public looking at things like the crypto space right now, opportunity is nowhere. And ironically enough, and this is the great part about it, I'm not going to show you this. I want you to subscribe to the site, please, and thank you. But you notice crypto, look at all the names that are in the actual hunting buys category here. And actually, in the after party, we'll circle back around and look at this. We've changed the wording of the scoring system. A lot of people didn't like my sort of, hey, 1 is a sell and 6 is a buy. Come on, let's be a little bit more descriptive. So we have some really cool wording. And actually, I think I put a tweet out this morning. I probably shouldn't do this, but I was just so over the top impressed that look at all the names that are now attractive. And I might even argue that SHIB has worked its way back down into the point where we could actually start hunting buys. So that is a very interesting tell. This is, I don't know whether you want to be a professional trader, whether you want to be a professional investor, whether you want to make money from running your small business of trading, right, with the expectation of turning a profit. But this is actually now a market that we can actually start getting interested again as investors. When, Gucci sweater wearers, guys saying, oh, buy Bitcoin at 70,000. Yeah, it's a guaranteed make money. Jeez, somebody shoot these people. It drives you nuts. Now, everything, of course, is on its knees. And I might argue, of course, the public is nowhere to be found. But this is actually when you should be really paying attention. Fascinating how this business works. Absolutely fascinating. I sure hope you're all learning from this. You want to learn how to play this game correctly? You want to make money at this thing, like make serious money? Well, the irony of it all is that the public is not even the slightest bit interested right now. So it's probably time that we start paying attention. Anyway, I think if anything, when I talk to you all, use Brian's birthday. You probably now remember Brian's birthday for the rest of your lives. Sell in May and walk away, all that. And then think of, if you can, I think probably the easiest way for you to think about this is when is the Southern Hemisphere's tax loss selling deadline? June 30th. There are a number of countries that have fiscal year ends, June 30th kind of idea, Australia, for instance. And so we're seeing net selling pressure into that event window. Also, too, we just went through big options expiry. In fact, I think I remember on Friday, and maybe I'll circle back around in the after party and review that. But if I'm not mistaken, I seem to recall on Friday we said that a lot of stock is going to Wall Street is going to be exercised on puts. And they were going to be very heavy things like BITO stock first thing this morning. And we'll probably expect to see some net selling out of them. And oh boy, have we ever seen that. Okay, so there's rant to start us off here. Our itinerary, you can see on the lower right-hand corner. What should we talk about here today? Number one, breadth data. Interesting, the broader stock market still just banging around this 50 line here. I wouldn't necessarily really consider this an overly attractive place to be a buyer or a seller, to be honest with you. It's kind of just like flip of the coin. And ironically enough, in this silly game, half of your job is to avoid these kind of flip of the coins. This would be like Hogue talking to us about buying or selling the POC, where if any of you are futures traders and if any of you know Hogue, and actually we have quite a few futures traders on the site. I don't know, Chris. Chris, of course, is working his way through the Top Step tryout program. What do you think? Would Hogue like people to be buying the POC, buying the middle of the range?
I don't think so.
So anyway, the point of the matter here is I might argue that the breadth indicator, looking the way that it is for the S&P 500, is exactly that. And what you're probably going to find is some parts of the market are going to do well, other parts of the market are not going to do so well. And on balance, for something like the big stock indexes, it's just a big hurry up and do nothing. And actually, interesting, we can technically use crypto's weakness here as a tell. Obviously, crypto is very technology oriented, which means that it's very electricity oriented, which means it's very cost of energy oriented. And if energy prices are rising dramatically, we should probably expect technology and crypto in particular to not do very well. And if you think about it in simplest terms, Bitcoin's whole sort of thesis is based on proof of work. What is the cost of the proof of work, i.e., what is the cost of production? And you might argue that if you have like rising energy prices rising dramatically, that's going to really eat into profit margins and maybe make the mining of Bitcoin as a profitable business less attractive. Well, that does make sense to me. Having said that, I think that crypto itself, the whole space is going through its very normal seasonal correction. And I suppose when we get to it in a bit, we could talk a little bit about what's happening in that space in earnest. And of course, in the after party, we'll circle around, take a look at this stuff in detail. So what's driving the market today? It is Monday. Monday's usually a pretty light news day. Coming out of the gate here, we did have a reading out of the Dallas Fed manufacturing index. Oh, what a surprise. It looks like crap. And if anything, what I'm hearing is that, Texas was all rah, rah, rah. Everybody was in love with Texas there. Through the sickness and getting the hell out of all the blue states, I suppose. It looks like Texas is has maybe come back down to earth. And Texas was never known as a big manufacturing hub. Of course, everybody knows the only thing you find in Texas is steers and queers. So which one are you? Yes. No, wait a minute. That's something completely different. Sorry. The only thing you find in Texas is oil, right? And steers. That's where the reference, and 10-gallon hats, right? But anyway. So not really a big surprise that the manufacturing sector of Dallas. I don't think there's a lot of manufacturing in Dallas itself. So it doesn't surprise me that this thing has actually been negative for quite some time here. Having said that, is this earth-shattering econs? Are we forging any new trends here with today's data? I don't think so. As well, on the docket, we had a couple Fed speakers. First one, I guess, Jesus, was that like midnight last night? Is that what that is? I don't know whether that's even relevant to today's trade. We have another one coming up here in, I guess, about an hour and a half. Fed daily speech. Yeah, it's kind of funny is that if anything, we have been seeing a lot of talk recently about how algorithms and bots and stuff are just feasting on each other. And I have to say, we did have a really cute little in the day trader room. I have a great day trader room. I absolutely love hanging out with those guys on a daily basis. Have fun in Monterey, Ed. But we had very choppy price action here today. Notice things like the NASDAQ are actually heavily under pressure. And actually, ES is doing relatively well. And relatively speaking, I mean, if we look at the heat map, what a surprise. Look who's actually leading the charge. We'll talk about that in a moment. And then there's, of course, your tech stocks. And what was interesting is I think that the whole market kind of sniffed out that there was going to be some sort of turn in the energy pits. And just to show you on the daily charts, I talked to you guys about this last week, so really this shouldn't be a surprise to anybody. We got this massive bull flag here in crude, and I don't see any stopping this. If anything, this is this little move here. This is going to create an A to B off of that low, C to D. And then when you start getting these sort of overlapping AB equals CDs, it's like the market's like speaking to us. So I think that the market is clearly saying, hey, you know what? I want, where's our ABCD? There it is. Boom. I want somewhere between 83, 85 and 85.65. And I have no plans on stopping until I get up into that area. So a monstrous rally here in the crude pits, which sucks, because anybody who doesn't like inflation, raise your hand. This isn't helping at all. And in fact, I kind of mentioned this to you guys a little bit ago. Let's see if I can show you. We did actually like put in a serious trend signal there in our inflation deflation gauge and the path of interest rates. Let's say, well, what is that? Topped out, geez, a few months ago. And then, unfortunately, and interesting how we just banged right up against this little market structure trend line there. And this happened about a week or so ago, well, maybe a week or two ago. And on those rising energy prices, of course, now this inflation deflation gauge is now pointing back towards inflation. Do we do nothing more than just come back to trend line resistance here? Maybe something along those lines. You can see I already have that line on the screen. Which means, that probably right there, that's your crude oil back up at 83, 84, $85 a barrel. Kind of rally window here. So kind of sucks, just over the past week or two. You can feel, Jesus, I went to the grocery store here in China and the inflationary pressures there not abating one bit. I mean, this China, what a train wreck this place is. And it's actually beautiful to see that even the woke media is now getting on the bandwagon and hating on this stupid idiot Justin Doofus that's in charge of my country. So it's good to see that at least the media now is starting to get a head on their shoulders with regard to the damage this guy's doing to our country. But anyway, so a little bit of a perk up there in inflationary pressures. And, I've been sort of counseling everybody who's been watching this channel regularly. That really not a big surprise given what our buddy oil prices are doing here. What's really interesting, and this sort of fast forward to later on in the discussion, but I might as well just jump to it now. What's super fascinating is that I believe that the market actually was anticipating this. First and foremost, if you're a longtime follower of me, then you know that this is kind of like religion in the market, that if you have rising energy prices, then there has to be one particular, first off, I mean, there's a couple of concepts here, but the first off is, and what I was saying there, rising energy prices 9 times out of 10 equates to falling technology. And so if we look at things like NVIDIA, I had put out a tweet the other day. Gee whiz, we've got bearish engulfing bars. And in this particular case, I had put out a tweet along the lines of we are a million miles away above value. Remember our buddy Stanley Druckenmiller, he actually sold out of all of his NVIDIA down here. And I get the distinct impression, the only people, who do you think, looking at this volume profile, this is value here, this shaded area of the price chart. Who do you think is buying up here? And notice it ain't on much size. Sadly, that's the public. And I think the public's going to get their head handed to them. It was interesting that back in February, March, we actually put in a bearish engulfing pattern, and the market had to go sideways for, the better part of 2 or 3 months. So I've been kind of conjecturing that after that bearish engulfing bar, it's a very nasty bearish signal there. We're probably going to see this market go at least, a good month or two of consolidation. And if we just do something simple, like where is like Colin and his pump chasers, there they are sitting 38.2 to 50% level. And really all that's going to be is just a Wyckoff check of this old high and filling in the gap and just a revisit of value high, right? You can see the top of this. In fact, in our education program, we'd call this a MUOC. And if you know what the word MUOC means, then you understand the principle here. So I would actually call this like a double distribution right now. So there's a distribution node, there's a distribution node. We should probably spend some time filling all of this in over the next maybe year or two, who knows. Just the same way. Remember, Tesla was like $400 or $500 a share following, their stock splits. And now Tesla's like $150 a share, $200 a share. So could NVIDIA here fall 50%? Keep in mind, Tesla, which was like the absolute darling of the market, and everybody was in love with Alan. Why, I have no idea, but Barnum and Bailey. That stock fell like 75%. Good old Brian and his 78.6 fibs and all that. I mean, I don't think that we're going to see that just yet. This thing's got a head of steam, and I think you're probably going to find a lot of buying interest comes in if we do revisit this range here. Notice too, though, there is this big gap right here. So anyway, the point of the matter here is tech stocks coming off, and it's not just NVIDIA. Micron also too, a fairly big semiconductor company. And I remember Micron from last cycle. Also another huge bearish engulfing bar. Can't call it a key reversal. I won't get into the semantics about that, but it is a bearish engulfing bar. And I mean, just this isn't really asking that, this is the end of capitalism. All we're saying is, this is the same as coming in and buying Bitcoin at like 70 grand. What are you doing? All right. So you can see where 50% rules is. This would just be WD GAN 101. Don't overthink this. Just keep it simple, stupid. I mean, that's a fairly sizable drop. Still another $40 to go on this thing. And in a weird sort of way, you can kind of see how this is like maybe a monstrous head and shoulders pattern that has to develop here. That would not surprise me. So I don't think it's necessarily that NVIDIA in particular is trouble. It's just these semiconductor stocks went way too far, too fast. I also think look at value down here. Holy crap. I mean, technically, we should basically trade back to that value high shelf there. That's scary, eh? And of course, look at all these gaps. Anybody that's worked with me for a while, what the statistical probability that these gaps will be filled in. So, the big semiconductors, they're kind of on the outs right now, a little bit sketchy. And what I find fascinating, of course, like I said there earlier, this is all I think about energy. And this is super cool. Pulled up the stock screener, 180-day reload zones, right? Everybody knows reload zones. And RSI, everybody knows RSI, and everybody knows W's and Brian. This is basically trade location, indicator confirmation, price structure, go. That's what we teach. That's the level 1 program. And look at the results that came up here. ConocoPhillips. What's that? Is that an oil stock? Occidental Petroleum. What's that? Oh, that's an oil stock? Don't see any tech stocks coming up here. All I see is oil stocks. And I've just got this screen up and running over the past week. So I thought that was fascinating. And we look at the broader market, and this is like poetry. And this is the screener and this, the platform, it's doing exactly what it's supposed to be doing. So the broader market, there's your NVIDIA, Micron's on here somewhere. If I can get Intel back around $27 or so, I'll probably be in there buying. I've had that order working forever. But the point of the matter here is, geez, tech looks rather sketchy here right now. But look at what's solidly green. The oil sector. There's ConocoPhillips, and there's Occidental Petroleum. Look at that. The OxyPeat up 3% on the day. So we can always explore that a little bit more. And Rocky, if you want, those are the kind of conversations that we'd have in the after party. So please join the site, and I'll be more than happy to answer those kind of inquiries on the after party that we do following this free broadcast. This is just supposed to be a fairly quick overview of the market. So not a big surprise. Tech is weak, and actually even some areas of tech are still, relatively firm. But tech is weak generally, sort of the darlings, if you will. And energy is strong, which again, I think actually makes perfect sense. That's usually what happens in the market. How strong does energy get? I don't know. It was interesting. Chris was telling me a story about how an electric car battery facility blew up in South Korea and a whole bunch of people died. So I'm still not really, in fact, not really. I don't believe in this whole electric car story. I think it was all just an absolute bullshit. Mr. Fink owns the media. He ramped up his media outlets to really pound the table on this whole ESG nonsense. Why? Because he was a major shareholder in Tesla and he wanted to make tons and tons of money. He made tons and tons and tons of money. And interesting, right at the very top of the market, at exactly where you were supposed to sell the stock technically, Mr. Fink comes out and says, well, it's not our responsibility to be ESG. That's up to your local governments. And boom, down goes Tesla stock. So I think it's all just a big fucking con job. And this is the dangerous thing about capitalism, folks. If anything, you have to learn from this. These people, there is no moral obligation for anybody in the capitalist system to tell you the truth, to be honorable, to have morals, to have ethics, none whatsoever. Welcome to the 21st century, everybody. Merry frickin' Christmas. Anyway, finish off this free broadcast. We'll take a quick boo. Obviously, if tech is feeling a little bit under the weather, I think the odds are crypto's feeling a little bit under the weather. We've been talking about this for quite some time. Of course, energy price is very strong. That doesn't help the tech story. And I don't think it's going to help crypto. So, if we just take a quick boo at old crypto, nothing here should surprise. Beamish has been barking to you about, and now even yesterday's video, I said, if we lose this weekly low, we've now accepted below the 13 EMA on this weekly chart. Our next stop should be the 30 SMA. I don't see any reason why that shouldn't happen. So yesterday's analysis on the Broiler Chicken Show was spot on, perfect. Couldn't have done a better job for all of you. Then if we look at the actual daily chart, you can see 30 SMA on the dailies now is going to look like that 13 EMA on the weeklies, and 200 SMA on the dailies is now going to look like that 30 SMA on the weeklies. And lo and behold, look where we just ended up. What a big surprise. We're now back in reload long zone. So I think you could actually make the argument that really this whole move is just absolutely stunningly cliche. And really nothing out of the ordinary. The only thing that pissed me off about this was high was slightly higher than this high, and that stopped me out. of these awesome shorts that I had on in the corner. You could see right there, right? And then I had on another short, which I was all proud of, and I got stopped out on a check of my entry. So it's like, so I got just completely screwed out of that trade. That's the way it goes. It's trader's life. If I did want a short, you can see I have this reload short zone window here, but we're now into reload long zones. So in a weird sort of way, everything that we talked about here over the past little while, ironically enough, this correction is now playing itself out. And there's probably not a hell of a lot more to go on the downside here. If we look at something like Ethereum, you can see that it's playing out. Thank heavens I wasn't euchred out of this trade. I have my stop. If 50% of the anticipated move gets hit, well, then I get to move my stop to scratch. And you can see our profit taking objective here is just a little bit away. And it does look to me like A, B, C, D. We probably should hit this. And of course, there's that 200 SMA that I talked about. I think that Ethereum now, 30 SMA is going to be resistance on the upside, 200 SMAs support on the downside. Also, too, if we look at like the broader crypto market, actually, I don't have that. Oh, here we go, way over here. This looks, oh boy, really bad. Momentum just looks like an absolute train wreck. I've been counseling all of you that we really shouldn't have any sort of uber bullishness about crypto until we get through this July 4th holiday weekend. So I hate to say it, folks. I don't think there's a huge hurry here to call a bottom. Next week or so here, and remember we said Australians tax law selling deadline here is the 1st. Next week's going to be just riddled with a whole bunch of national holidays. So it's going to be really light trading. I don't think we actually bottom in earnest for at least another week and a half, 2 weeks, which really sucks. So point of the matter here is, and I have been talking to people about this specifically on the site, been waiting for a lot of these names to sort of finish completing correcting, kind of like what you saw out of the NVDA, same sort of thing. Rend is sort of a crypto darling, an actual real world fundamental name. And, my comment in this space is just simply, you actually had a really good tell that a lot of this crypto rally was bullshit because everything was rallying on these stupid meme coins, which is nothing. It's garbage. There's no value to any of that. Something like a Rend, which actually is a story, when this thing finally corrects and it dumps, the public will actually, and at the same time, Bitcoin, which actually is a real asset and actually has real life applicability. Well, so that's debatable, but anyway, Ethereum, real world asset, real world applicability. Once these things start correcting in earnest and the public goes, oh, Bitcoin down 20%, down 40, 50% from its peaks. Oh my God, it's horrible. It's terrible. That's your bottom. So I might argue, you see the Rend, nice bear A, B, C, D. When we see this thing puking out and finally giving up, that's your bottom. Because they always say that the big boys, the darlings, they always correct last. And then once they correct, once the big indexes, the big blue chips correct, that's when the public, of course, gets most negative. And ironically enough, that's usually the bottom. So there you go. Let's head on over to the after party. We can talk a little volume profile if you'd like. Over there in the after party, don't really like to teach those kind of things. Keep in mind, Rocky, it is a full module in our level 2 program. And it is part of the education program. So I don't have a problem talking about it, but I'm not going to give like a full tutorial lecture on how do you do this. My advice to you is if you want to learn this stuff, take the goddamn education program. That's why I built it. All right, let's leave it at that. Have yourselves a great rest of your day. PMA for the win. I think I'm meeting with the Wall Street silver people here this afternoon. I don't know. We'll see what happens. If I get stood up again today, I think maybe that'll be the end of our relationship. But we'll see what happens. The appointment is booked, and if we're lucky, maybe we have a nice little offering for all of you. All right. Have yourselves a great day. PMA for the win. Slow and steady wins race. Remember what your number one job is. Don't take no wooden nickels. All the best, and bye for now.